Hello, this is John Locke with the Lock in Your Success Trading Performance Podcast, where it's all about real traders, real coaching, and real problems. Now, this is going to be episode number 18, and today I'd like to talk to you about losing money. And I know that may not be a wonderful topic, but it's something that we have to address as traders. Now, in the last episode number 17, I recall talking about the tremendous opportunity available in the marketplace with this corona correction, and I'm really hoping that some of you took advantage, or all of you took advantage, of those wonderful opportunities that were present. And I also hope you continue to take advantage of the opportunities that are currently available in the marketplace to you today. Unfortunately, however, I know that many traders did not take advantage of those opportunities because they were either too scared to get in, or they thought the market might go lower, or perhaps they were just greedy and waiting for the absolute lowest point they could possibly find in order to jump into the marketplace. And in doing so, there's a good chance that they missed possibly the best time to invest in stocks in the last decade. And now, as of this recording, the S&P 500 has retraced approximately 50% of its loss, and many traders may have missed their chance. And I say may have because, the market may go back down to those lows again, and it may even go lower. We don't really know. Nobody knows. But in my opinion, it's equally as possible to say that the lows have been set in, and we may never see those prices again in our trading lifetime. That said, even though many of the best trades themselves have come and gone, there's still a lot of great opportunity out there. My question is, are you going to let those slip by too? Well, I can tell you by many years of working with traders that what you're likely to do with this, and what you likely did with this, and what you're likely to do with future opportunity is going to be the same. And it's going to depend on what your thoughts are around the topic of losing money. Look, I've talked to traders for over a decade now who've been afraid to put money in the market because they said, well, the market level is just too high, and I'm afraid that if I put money in the market now, that I'm going to lose money. Therefore, what they were doing is they're waiting for this big, huge correction to come so that they could finally invest that money they were scared to put in the market. Well, that correction just happened, so my question to you now is, did you get in? If that answer is no, why not? This is what you were waiting for, right? But here's the problem. Many of the traders who have been avoiding adding to their positions over the last 10 years, they withheld cash because of the reason that they were afraid to lose money. Those traders, because of their mindset, this is how it went in their head as the market went down. They realized a loss in the positions they did have on, because most people do have some long positions in the market, and they can see that money dropping as the market takes a 30% fall in a couple of weeks. And when they think about that loss, they become even more afraid of losing money. In other words, that's not a confidence-inspiring feeling for them. So now they're even more afraid of losing money than they were when the market was high. In other words, many of us have long stock portfolios. And if we did, chances are we drew down a lot of money when the market went down. But here's the dilemma. We're afraid of losing money, right? That's our predetermined thought. And if we stay in the market and the market's gone down and we've already lost money, and if that market continues to go down, we're going to lose more money. So we're going to want to, or have the feeling that we want to pull the money out of the market before we lose more money, right? And if we had cash that we held aside for a long period of time waiting for this opportunity, because that's our mindset, we're thinking, well, I know I said I was going to put cash in the market, but I don't think it's low enough yet. What if I put this money in the market and the market continues to drop? What if it continues to go down? That's possible, right? That could happen. We don't know where the bottom is. So if losing money is your fear, if you're afraid of that, if that's your focus, it's going to be much more scary to try to add to your positions in a pandemic than it was when things were going on along fine and normal and the market just happened to be overvalued. So as a result, most or many traders either didn't do anything, they just left the stock in as they were, which is okay, or they pulled money out of the market as the market was coming down and when it was nearing a bottom. This being the case, when the market does go back up, when it does get back to the all-time highs once again, and they never added into the market or they had fewer stocks than they did before, they lost money in this whole event. They turned this tremendous opportunity into something to be afraid of, something that was fearful. And now that the market's overvalued once again, are they going to put money in the market now? Probably not. This is the dilemma we have with the scarcity mindset. And that dilemma is that your thinking is a self-fulfilled prophecy. If you're focused on scarcity and losing money, or the fear of losing money, that is ultimately what you will bring upon yourself. Now, don't get me wrong. I also thought that the market was overvalued for the last several years, and I too was withholding putting money in the market. I took the same actions as a lot of other traders in that time frame. But the difference is I didn't withhold the money because I was afraid to lose it. I withheld the money just because I didn't think the opportunity to make money was all that good given the overvaluation of the marketplace. Now, those two separate thoughts, I'm afraid of losing money versus I don't think the opportunity is right yet, are going to produce two very different feelings when the market does come down, and then that's going to result in two very different actions. Realize that I too have a long stock portfolio with a substantial amount of money in it. And when the market dropped, I too lost a lot of money in my long portfolios. So the situation was the same, but here's the difference. I wasn't attached to the money. Therefore, instead of being afraid and crawling into a shell, I had my head up looking for opportunity, looking for ways to make money. The other thing I'd like to point out too is I wasn't overly focused on greed, because greed is a problem too. So it's not just fear around losing money, but it's also greed. The people who are greedy are waiting for the absolute bottom. And they're waiting for the market to come down to some absurd number that they pick out in their head. And then when the market gets there, they think, well, maybe it'll go lower. Right? So the greedy people are waiting for it to go lower because they want to get in at the best possible price they could get, and they keep moving the bar. And the people who are afraid are waiting for it to go lower because, even if they are going to get in, they're waiting for it to go lower because they're afraid. They want to make sure it's at the lowest possible point, so there's no possible way that they'll lose money if they add more money to the marketplace because, hey, they've already lost a bunch of money, or at least they've drawn down. And therefore they didn't get in, and therefore they have missed this opportunity. Again, I'm not saying the opportunity won't be back, but in my opinion, I doubt that it will, at least not for a long time. Now, for me, I'm not looking for the absolute bottom. I'm not looking to the point where I'm going to, hit my absolute best profit. I'm not looking for the point where if I get in, that there's no possible way in the world that the market's going to continue to go down. I'm simply looking for a reasonably good price. And when I saw that reasonably good price, I pulled the trigger and I entered the market. Not because I thought the market was bottom, but because I thought that the market was at a good value. Now, in the process of doing that, I did come very close to hitting the bottom of the market. I bought some assets a little bit before the market bottom, then I bought some assets right after the market bottom. I may have even hit the bottom in a couple of things as well. Could I have done better? Yeah, I could probably have done better. Did some people maybe time the market slightly better than me? Yeah, probably. I don't know. But I'm not judging myself on that, because what I do know is that I did a hell of a lot better than the person who was waiting and waiting and waiting and never got in at all. and it's still waiting for maybe the market to come back down again, which it may or may not do. We don't know. And while the market might eventually reverse and turn down and retest the previous lows, and it may even go lower than that, possibly a lot lower than that, well, I acknowledge that that is a possibility. And maybe it may turn out in the future, the unknown future, that I may have been better off waiting. I also know that if I was scared to get in when I got in, then it's very likely I'm going to be scared to get in when things look even worse and the market goes even lower. In other words, if I'm not taking action on these types of things, it's not likely I'm getting it. My point being, the scarcity mindset is always scarce. And it gets worse. It feels more scarce when things are uncertain. And when the market goes down, things are uncertain. That's why the market's down. And that being the case, when the market does come down, it's going to create feelings and therefore actions that result in the very thing you're trying to avoid, losing money. And that being the case, when the market does come down, it's going to end up creating very scared, insecure feelings, and therefore actions that are going to result in the very thing you're trying to avoid in the first place, and that thing is losing money. Now, I'm often asked, well, how can I avoid the scarcity mindset? How can I avoid the scarcity mindset when I really need the money? I'm relying on that money. And my response to that is this. The market doesn't care whether you need the money or not. The market takes from the reactive, the scared, and the greedy, and it gives to the purposeful and the patient. If you do certain things, you will make money over the long term. If you do other things, you're going to lose money over the long term. There is no judgment. Therefore, if you truly want to make money over the long term in the market, you need to act with purpose and patience and take advantage of opportunities when they come along. And if you have no choice but to act with purpose and patience if you want to make money, ask yourself, what would I have to feel in order to act with purpose and patience? When you answer that question, you'll find that those actions never come from the place of scarcity. They never come from the feelings of scarcity, and they never come from the thoughts of scarcity. They come from the thoughts of abundance. Realize that we all have certain things that we believe to be true. And perhaps you have this deep-seated belief that you don't have enough. And if you truly don't have enough, the reason why you probably don't have enough is because of the thoughts and feelings of scarcity. Therefore, when we talk about beliefs, you should not be asking yourself whether or not a belief you have is true. You should be asking yourself if the belief you have is useful, and if that belief is giving you the thoughts and emotions that are required in order to make more money. And if the answer is no, I encourage you to choose to think differently. I encourage you to find a thought that will create the feelings that will cause you to make you feel compelled to take the actions to get the results that you want. And then once you find out what those thoughts are, what those feelings are, choose to believe them. Practice believing them. Choose to believe them and practice believing them until they are a part of you. This way, the next time you actually do lose some money or you draw down money, you'll be able to focus on finding opportunities and finding great ways to make a lot of money. And by doing so, you're going to end up much richer in the long run. And that's what I have for you today. I encourage you to visit us today at lockingyoursuccess.com and take a look at our pro membership so that you too can break through barriers and make quantum leaps in your trading. Thank you for joining me, and I look forward to seeing you on the next Trading Performance Podcast.
Hey, if you enjoyed listening to this podcast, you have to check out my Trading Performance membership, where we take all this material to the next level. We study it and we apply it to bring our trading performance to peak levels. Simply go to tradingperformancepodcast.com. That's one word, tradingperformancepodcast.com, to receive information on how you too can become involved and improve your trading. I look forward to seeing you there.